The most significant obligation of any financial institution is to be able to protect the wealth of its customers. For banks, that means being able to protect the depositors that have entrusted us with their funds. Historically, banks have been able to borrow from the public at relatively low rates and be able to lend at high rates. Banks in our region are no longer able to lend at high rates because the demand for loans are not as strong as they have been over the last 10 to 15 years. This means that there are fewer customers who are able to qualify for loans, and that means banks have to fight for the same customer base, and that has forced lending rates down. Lending rates being reduced, coupled with a high level of non-performing loans, that is, customers who are not repaying their loans, and increased operating costs, has meant that banks have had to look at their entire portfolio and start to charge for services that they previously had not been charging for. Those services were previously subsidized by the high lending rates that banks were able to charge during the growth years within our economies. Those growth years are no longer there, and we're actually going through a period of what I would say is low growth, and banks have had to find ways to properly manage their profitability to protect depositors. Profitability is important because profitability is used to capitalize banks. A well-capitalized bank avoids having to go to the government in the event of a banking crisis. So you want to make sure you have banks that are well-capitalized, well-managed, and able to protect depositors' funds. And banks have had to find ways to protect depositors by ensuring that the services they offer are properly priced. This was not a challenge that banks had faced in the past, and is one that banks are now grappling with, especially as the industry goes through challenges from external factors where technology has increased competition within our markets. We can now use Apple Pay as an example to transact business. This means that there are technology companies that are competing with our banks. Our banks need to find ways to be able to have enough funds to invest in technology to be able to protect our customer base and at the same time keep the wealth of our nations. The banking sector within our region is pivotal to our growth, and we need to find ways to protect it.